Okay, everybody. So today we're really just going to be focused on building case studies with, I always do this draw on my screen. We're going to do case studies basically on everything that we've learned today. We're going to do case studies together. I'll show you how to build them out, how we're going to label them, like our thought process going into them, as well as like cover what we're going to do over the weekend into the coming week as well. What I want you guys to do is obviously go watch all of the content if you haven't already, or freshen up on certain content that you're struggling with. I want everybody to build diagrams of the concepts we learn and then back it up with real charts. Okay. So just like I've done in the PDF section or attached to some of the videos or in the videos, like when I'm explaining liquidity, you'll see in the newest videos that I uploaded, or even if you go into the structure map, like the diagrams that I've drawn, go out and draw them by yourself. Don't look at what I've drawn either. Like go out and do it yourself, because this is what, you're exercising your brain. You're really applying yourself, and this is what makes it stick. You're recalling information. Okay. By recalling, that's what sticks. Record it if you want. That really helps. I have like 100 gigs of recordings that no one's ever going to see. Yeah, mark these out, save them, print them out if you want, go back onto the chart, do it with real data a couple times, save it all into a folder or something for literally every concept that we've learned, every single thing of time and price, like the weekly or monthly manipulation. How does the high of the day, how does the high of the low set, or sorry, how does the low of the day set, low of the week, high of the week, high of the month, low of the month? How does this perform in different what am I trying to say? What's the word I'm looking for here? Environments, I guess, of the market. Like, are we in a trending market? Are we in a ranging market, right? Find out how these things present themselves, through different times. This is very hands-off for me, right? But if you guys, like, I'm here not to do the work for you. I'm here to help you guys out when you need it. And like, I really encourage you guys to ask questions. Hit me up even one-on-one if it's something that you're not like, you might feel is a stupid question. Hit me up one-on-one. I mean, nothing's a stupid question, right? But sometimes you feel like that. Book a one-on-one. We can schedule something if you're struggling with anything in particular, or send me charts, have me proofread them, right? Or send them in the chat, have me proofread them. Literally everything that we've learned so far. So time and price, range sweeps, order blocks, breaker blocks. How do these things develop? What does a failed breaker block look like? What does a bullish breaker block look? Or what does a successful breaker block look like? Like, how did price displace through the successful one versus did price kind of, we have a push down, push up, right? This could be like a successful breaker block. Or did price kind of start pausing before breaking up as it came through, and then it failed to hold, right? Because it wasn't a displacement through, right? So like, build out examples of all of this before we get into testing. And this is boring. It really is boring. But by doing this, you guys are able to then monitor whether your testing is of good quality or not, right? If you don't know what you're testing, then why the hell are you testing? And that's the whole point of this, right? And everyone's in this program because the end goal is for everybody to have their own version of the trading plan that works for them, right? And this is the only way that you could do that, is by doing all of these super boring but extremely important things, right? This is super rudimentary stuff, right? It's like you're LeBron James and you're practicing your dribble, right? Like, you still have to do it even if you are LeBron James. Like, he's going and doing drills where he's practicing his dribbling, right? So right now you're going to do this stuff, and 5 years from now, you're going to be doing this stuff, right? So you might as well start doing it now, and you might as well start doing it correctly. Okay. Yeah, so we're going to do a little bit of that today, and we're going to do some case study building where we just basically look for trades, execute the entry model, and all that stuff, right? Any questions?
Nope,
Good.
not for me.
Everyone's good? Anybody have time to go on the website, look at some new stuff?
Yes, I did.
That's good. Let me just move this here because I don't want to type in the chat. Okay, so first thing we're gonna do, let's pick a random piece price. Okay. Or what we're gonna do instead, we're gonna pick like a high of the week. So I'm just gonna grab someone, mark out any random low in an up candle or high in a down candle. Any random one. I didn't see. Sorry, I was looking at the chat. A bunch of messages popped up. Want to mark them out again? Or one of them? Sure.
Those,
Okay. So what I'm going to do here is click Alt-J. Grab it, hold Control. I don't know what that is on Mac, but it was this one, correct?
Yeah.
Okay, so this is the low of the week. So going into this, I want to know what I'm looking for, okay? So in advance, I'm going to go here. And again, do this for literally every single concept and build these case studies, like in detail, not just repeating the entry model, but actually understanding every single one of the concepts that we've been learning. Okay, so what are we testing here? We're testing low of the week, manipulation. Questions to ask, right? What caused the low of the week? Is it possible to determine in real time? Ask yourself good questions. If you don't know what questions to ask me and I'll give them to you. Is it possible to determine in real time? What else? Let's see. Low of the week manipulation. Let's also get into entries available at or ahead of the low of the week, right? So what this means is like after the low of the week is formed, are there available entries based on the idea that we expect the rest of the week to be bullish, right? So are there long entries, in other words? Are there long entries? Anyone have any other good questions to ask that we can like investigate here? Anyone have anything they can think of? Okay, so this is what we're going to test here right now. The first thing we're going to look for is low of the week manipulation. What caused the manipulation to happen that set the low of the week? So does anyone see anything that stands out here clearly on the weekly chart? So not just in this area, but let's mark everything out leading up to it as well. So just doing as we normally do, right? Tracking order flow, first line of defense, that kind of thing, right? So anybody that wants to mark out like FEGs, where's order flow, even structure, just hop on the mic. Let's do it together. Anybody? We got quiet group today.
I can do it.
Sure.
Where should we begin, from the bottom?
Yeah, start from the bottom. We need to select some point to start at. So usually I'll just select the high and the low.
Okay. So here, the break. Give me 1 sec. Okay. The break. So what caused it is this zone here, but I wouldn't take this because how I understand fair value gap is like it needs to come down here, right? So
well, if we look to the
I mean,
left,
this is weekly, but like I
right.
don't know.
But if we look to the left here, let's extend this low out.
Okay, so this is like breaker block.
Yeah. So it'd be the up candle though. So a breaker
Okay.
block by definition is an order block. So if I go like this, it is an order block that has failed and is now being retested on the other side. So it'd be the up close candle. Pushes down, reacts to that order block here, you see. And if I skip through price, we're looking for displacement through. So we kind of get that right here, right? And then it's confirmed when we break above. So we're now in this breaker block.
So this is valid, okay.
Yeah, this is 100% valid. So valid.
For breaker blocks, can it be the wick that breaks and not just the body?
Yeah, it could be like, you mean this?
Yes.
Yeah, so as soon as price comes above this region, it's engaged, okay? As soon as it comes
Understood.
above this region, it's engaged. If I go into the lower time frame now, as soon as we come above this region like this, it is now engaged and we can expect it to influence price. Okay. Of course, a weekly breaker is not exactly the best confluence on its own, but yeah. We have this here. Now we're pushing up. Now, Bobbin,
Yeah.
I too would have probably been looking at this if I'm being completely honest. But this is the weekly time frame. And I mean, we have a ton of time, right? This is 1, 2, 3, 4 weeks. 4 weeks to
Yeah.
confirm this on lower time frame, right? So we can go to the daily and we can see it's
There is
very
definitely,
clearly
yeah.
holding here, right? It's very clearly holding. We're getting this reactions out, right? On a lower time frame, these are probably tradable areas, right? You have a clear sweep here. Break up. But anyways, let's go back to the 1 week. Let's skip ahead here. Okay, so what else do we see here?
Now after this break, we have this huge imbalance fair value gap that is mitigated.
Yep.
And after that, there is like also a break. And what caused that break is, I mean, it starts from down here, but I would say this candle is also like took some liquidity before it broke up. So
Okay.
it also considers as a valid
So we
candle
have
that
what?
broke the structure.
1 ISP, 2 ISPs, 3 ISPs, and potentially 4 ISPs here, right?
Yeah.
And this is the weekly time frame, so this is 100% valid. Like on the daily, that's 100% an ISP. But yeah, when we're looking at the weekly time frame, we'd just be looking at these ones. But you know, on a fractal nature, that's 100% an ISP. Let's mark that out as well. Okay, so the smaller one. Yeah. There we go. Okay, so again, what are we testing here? Low of the week manipulation. So this is now come below here. You've already pointed out so that we've now swept below here. We'll just mark this out as we have a draw on liquidity on the weekly chart. And then preceding this, right? So if we go back to the bar replay here, we can see that this breaker structure hasn't happened. So would it be fair to say that this is the next likely drawn liquidity, like the lowest hanging
Yeah,
fruit?
100%.
Yeah. Right. So basically what we're asking ourselves here is what's happened to set the low of the week to then come and push to take out this high. Okay. So is there any more information that we can gather from the weekly?
There is also what I see is like swing up here. So we can like mark that out also. And I would mark here also this fair value gap and this candle because this is what created all this bearish push to the downside.
For sure. Yeah, so I tend to like to mark out one or the other. I usually just mark out the FEG and just be aware of this. Or what I'll do is like I'll mark out the high like that. Makes it a little easier for me to understand. Less clutter on the chart. Okay. So above here, just above here, there's an insane amount of liquidity because doesn't matter if there's equals, right? That's not necessarily the liquidity pool in focus. This is the liquidity, or this is the sweep, the beginning of a massive impulsive down move. So there's a huge pool of orders just above this high. This high didn't cause it. This high didn't cause it. These highs didn't cause it. The high that caused the impulsive move or the displacement is this one. So the liquidity pool instantly becomes above this high at a minimum. Not to say that it won't sweep higher, but all it needs to do
It's just sweep
is sweep
above and then
the
go.
origin. Okay. So
Yeah.
now I'm going to go down into the daily time frame. We're going to go on the daily time frame and see what we can see. Again, this is that low of the week. How did it form? Okay, it formed on Monday. So just keeping track of time as well.
Mhm.
Formed on Monday and it swept previous daily low, another previous daily low. Okay. So Monday and Thursday. So it actually even swept the previous week's low, right? Which we can see here. This was the previous week's low. Okay. And you can see that and confirm it on the weekly chart. You swept the previous week's low. So that's a large pool of liquidity. And if we're in an uptrend, we're expecting higher prices. We're looking for the previous daily, weekly, or even monthly lows to be manipulated below before continuing up, right? Breakout traders and whatnot stuck on lower time frames that are unaware of what's driving the market on the higher time frame will get caught offside here, right? Did we see anything else here on the daily?
Starting from this point, right?
Sure.
Okay, so this is like ISP, right? And then there is like another ISP that goes from down here. Also, I mean, this is also ISP, right? So just tracking the order flow.
100%.
And then we have like this bigger break of the structure. Imbalance formed around here.
Yep. Okay, so now we've tracked order flow, right? Let's
Yeah.
Let me do this. Actually, no, let's keep these. I don't want this to get too cluttered here. I'll make these the gray. Like this. Okay. So we have this one and we have this one, right? Okay, so now we've tracked the order flow. We've mapped out structure, tracked order flow. Now we want to map out our POIs. Do we see any POIs? Whether they're traded to or not really doesn't matter.
I see like this fair value gap. This is the first line of defense. And this
Okay.
is the last zone. If they want to continue the order flow, it shouldn't be broken down.
Okay. Let's look more down here though. Okay, because again, what we're testing here is what caused the low of the week. We're trying to figure that out. We'll get up to here later, but
Okay.
just for right now. So is there anything in here that stands out to you?
I see this now because of this bigger break of the structure, this as a liquidity down here. But if this is the candle that it gets manipulated, I think there is the liquidity.
There's liquidity. We already got that with the previous weekly low. We're looking for POIs now. So not FEGs. We're looking for supply and demand breakers and OBs.
For me personally, I would take like hold this candle under the liquidity that is created.
Okay. So remember, we have a draw on liquidity in mind from this point. Okay, we have a draw on liquidity in mind. We have higher time frame backing. We've broken structure. So this has given us that daily SMB, right? So we've had that like daily SMB up here, which is putting us back engaged. We have a clear draw on liquidity. Ooh, let's go. Come on, man. Clear draw on liquidity. What do we know about order flow when we have a draw on liquidity?
That is gonna go.
What do we understand about our ISP system when we have a draw on liquidity? Or a next likely draw on liquidity, rather.
that it's gonna go up there and the type 2 is gonna hold till the next draw on
Exactly.
liquidity.
Type twos are gonna hold, right? So we don't need to look at below here as liquidity. Right? We're looking
Oh yeah,
for,
because on a weekly we have the higher time, next likely draw on liquidity, right?
yeah, exactly. And because we have this SMB now, we're engaged with order flow on the daily time frame to target at least this, right? So
Oh, can I ask you just like, because the weekly form this like manipulation, so technically if we are assuming that we are gonna go higher, this should be the last POI before going before going up, right?
for sure. So we have this one. And you can see we've come out of it, tapped into it, continue off of it. We have this one here, right?
Yeah.
This one, which we've taken liquidity into, there's no reason we should come below here. If order flow is in fact intact to get this target, there's zero reason why we should come below here. So we set the low, push up. We've even set equals here with the opening of the week, a liquidity pool above it, right? When we're looking at POIs like this isn't an order block that takes liquidity and then breaks structure like this breaker, right? This is a breaker. When there's a breaker, we don't need much liquidity before. But this is more of like an OB as a result, like on the way. This is, you trade this like typical supply and demand, okay? We have liquidity pool above it. We're looking to raid that liquidity pool into a higher time frame POI, okay? But we can expect that this holds, right?
Yeah.
We also have a breaker here, right? This is a breaker. 1, 2, 3 bullish candles, pushes down, pushes up, displaces through, right? And then we hold that here. Not the most important thing here because it's not so refined, but just to take note. So we're asking ourselves, what caused the low of the week? What did this smart money do to set the low of the week and prime the rest of the week for bullish prices? Can you build a narrative with the information that you have available to you now?
Yeah, I can. I see that they like we said, like this liquidity is taken. So there is like, this should be type 1 literally, right?
Yeah,
So
100%. This is type 1. So let's for the
everything
sake of
that
this
is
exercise,
going,
we're going to mark out type 2s as green and type 1s as red, right?
yeah.
Okay.
So everything till the next likely draw on liquidity, everything should be like type 2. I mean, type 2 should be holding till the next draw on liquidity.
Sure. The previous weekly low into daily
Into the,
OB, right?
yeah.
Let's just build a narrative. So let's start from all the way back here. We had an HTF liquidation previous week into weekly FEG, right? That would be this. We had then a break or an daily SMB realigning with weekly order flow, right? So you've had the daily now realigned with the order flow. We have the previous weekly low here. Previous weekly week's low is above OB. So put this up here. Previous weekly low is above the order block. Took previous weekly lows liquidity into the daily order block on Monday, right? So this is all the information that we can get regarding the manipulation that happened to set the low of the week. So what's the next step? Be to drop down timeframes and look even further, right?
Yeah.
Okay, so on the 4-hour, what do we see? What are we asking ourselves? Let's go back to our list here. Let's do this. There we go. I'll delete this for now. Let's go back here. What caused the low of the week? Okay, so we see that the low of the week is a result of liquidation here.
Yeah.
And then a breakup. Confirming. Is it possible to determine in real time? Would it be possible, in other words, would it be possible to see this and predict it in real time?
Yeah, yeah,
I think so.
absolutely.
This is pretty clear. Okay. Would this be possible to trade? Probably not. We don't have enough information here alone, but probably not, but we don't have to, right? The importance of determining the low or the high of any week is to help form a bias for the rest of the week, right? So we don't need to be the first one in and catch the low and hold it for the whole week. Of course not. What we're doing is this exercise to train our eyes to see this so that we can help frame a bias for the rest of the week. Okay.
Yeah.
Low of the day, entry models and case studies. Okay. So we're also going to say follow before this. Follow fractal order flow. So all that means is we're going to follow order flow throughout different time frames. Okay. So on the 4 hour here, we have the break up confirming. What do we see here? We have an ISP that's taken by an ISP giving us an SMB. Of course, this may be
SMB.
redundant because we're probably already bullish if we went and map this all out, but for the sake of it, we have an SMB here, right? That's confirming us bullish. So now what do we have here? What are all our time frames doing right now?
They are like just pushing bullish after this sweep. What I see here is also small fair value gap over here.
Okay, beautiful.
So that, I mean, I know it's a weak week, so we cannot consider the break of the structure, but on a lower time frame, I'm pretty sure there is a candle above this.
100%. This is absolutely a break of structure. If I go to the 1 hour, it's probably a break of structure. Right. I mean, we do have a break here. We're coming back into that FEG twice, right?
Yeah.
But it's fine, right? Even if we can't classify this as a break of structure, we can still it is a break of structure, of course, on a lower time frame. So it's all about building context, but generally we want to be strict with the rule set. But we understand that the weekly is driving up, the daily is realigned, the 4 hour is realigned. We have a very clear next likely draw on liquidity. That's a weak structure, right? It's weak structure. It's expectational order flow is expected to take that, right? Everything's telling us bullish, right? So now we can engage simply. We understand that type 2s will hold. We can engage our first line of defense philosophy to this, right? So what is the first line of defense? We have an FEG here. Do we stack it with something?
We also have, this order block that is like highest over here, so we can take that.
Yeah, so we have this. Like we do arguably have a breaker, but see how it chops through? We'd like to see displacement through a breaker. Okay.
Okay.
You don't like to see it chop through like this. Then it's less valuable, so to speak. So we're just going to take this SND here as first line of defense. And I mean, this is a completely reasonable trade to take the FEG, covering candle 2, and targeting that next likely draw on liquidity. So this would be a 4 hour trade using our system, right? And 120 pips, you can hold this for, what is that, a few days? 6 days. You're holding that for almost a week, but 6 are, right? For any of you with day jobs, you can trade the system super effectively, and you can start building out your case studies like that if you want to. Just applying the MTF, HTF, MTF, LTF model. So in this case, the HTF is the weekly, the medium time frame is the daily, and your LTF is the 4 hour, right? So you'd have one entry here, you have one entry here, right? You can target, the next swing low as protected, or if you want to be very safe, you can target here. So we have a 2R that week, we have a 2.8, 3R, and a, what is that, 5.6 and back, and a 5.78 R, right? So that's your trading week done. I mean, that's an insane amount of R. And if we just go back to what we were talking about earlier, 5R on a 200K account was already like 10 grand or something, right?
Yeah.
How much more money do you need a week? Right? So this model works even on a higher time frame. So we can build case studies around this, take screenshots, save them. What I want you guys to do is also label them with the models that played out, right? So you're going to draw diagrams of everything like this rate of a previous week low. You know, how does this develop? Write some stuff about it. I'll review them all. Help you guys out. Book one-on-ones with me if you don't know where to start. Completely fine. We can go over this again anyways. And then label them with the types of manipulation that have occurred, for example. So we have rate of previous weekly low. We have type 2s taking control. Well, this is the entry model, right? It's type 2s taking control up until the next likely draw on liquidity. We have, what did we use as complete? We have breaker block here, or order block. We have breaker block, right? Label the relevant information, attach them to your case study here so that you can review it at any time, right? And freshen up. And even if you don't need to freshen up, I still recommend that you go and review these things, okay? Now again, even if you don't look at them at all, this exercise really helps to ingrain this information into you, okay? So let's go down to, we're on the 4 hour here. Let's see if we can refine this even further on maybe the 1 hour. We understand this is the previous week's low. Okay, it's not going to move. SMB on the 4 hour. Get a trade idea in here. Do we see anything else?
Over here on the
Anywhere in
whole
this leg that
story.
we're looking at?
What I see here is like also this break here stacked with this fair value gap and this whole order block.
Good. So we have fair value gap, we have order block. Beautiful. Long wick, select the body. Okay, so we have a stack here. Let's start looking now at the times of day, okay?
Okay.
So when did this push up happen? When did this order block develop? 4 a.m. So for you guys that are not in New York, 4 a.m. is London kill zone. So London session. This is hot spot of trading, okay?
Yeah.
What we can do for anybody that, you know, isn't totally caught up with the webinars, this may be a little bit confusing because, I mean, it's a ton of information to take in. But time and price is a big part of our trading plan. And what we can do to give further confirmation of the legitimacy of a POI, like a breaker or an order block, is look at the development of it. Look at the time, 4 a.m. Okay, this is London kill zone. That means that this is likely a cause of institutional activity. If this took place at 5 p.m. spread hours, we can completely disregard it because we understand that businesses aren't trading or transacting at those times. They're transacting during London kill zone and the New York kill zone, mostly. You can also say the Asian kill zone, but usually we're looking at the Asian kill zone as an area of liquidity, right? Not for confirmations of POIs. Okay, so we see London kill zone OB. We see this push happened at 8 a.m. Beautiful, leaving displacement. Okay, again, that would be the New York kill zone right here. If London kill zone, OB shaped up. Displacement happened at New York kill zone, another sign of institutional activity, meaning there's residual orders in here. If we come back and look when it tapped in during 4 p.m. So actually very late. So you wouldn't get involved here. Okay, but let's see and follow price as it leaves this area. So we have an order flow shift. Is everybody following? A little checkup. Everyone's good. Can everyone leave like a 1 in the chat so I know that everybody's on track here? Okay. So, Bo, what do we see here?
Over here, what I see after this order flow shift, there is is this a breaker block up here, or I'm not sure about this one. I think
Yeah,
it's
is.
like over here, but
No, this
on
is a
maybe on
break
smaller
block on the
time
lower
frame.
time frame. If we want, we
Yeah.
can go down and we can now see on a lower time frame if it makes sense, or a higher time frame, right? So we're on the 1 hour. So let's go to the 2
Yeah.
hour. 2 hour, I don't see anything. Let's go to the 30-minute. 30-minute. It's a little more
Yeah,
clear,
there
right?
it is.
We
Yeah.
see a take on liquidity, right, into the FEG. We know that's a form of liquidity. Take on liquidity, a breakdown, and a clear displacement up. You can see all these consecutive green candles on the 30-minute. This is showing displacement. If I go to the 1 hour, we can see consecutive candles. If I go to the 3 hour, we can see two big, beautiful bullish candles, right?
Yeah.
I don't know why I selected 3 hour, but okay, so we have an order flow shift and we have an order block, right? So we can mark that out. Now what?
Now what is after that? We also have this displacement. Fair value gap type 2 should be holding till up
We're on
here.
liquidity. Let's go back a
Yeah.
little bit. What about in here? We got an FEG as well, right? So just POI
Yeah.
stack, right? So because we understand that we have this breaker layered on with our FEG, what do we call these?
How do you call it? It's a gap, breakaway gap, right?
Yes, breakaway gap. And what is a breakaway gap?
I'm not sure about definition about that.
Okay, so a breakaway gap, go back, everyone reread or download and reread the POI guidebook that's on the website. You'll see that big header there. It says POI guidebook, and learn about breakaway gaps. It'll be in the last section of POI stacking. Okay. A breakaway gap is an expected FEG or an FEG that is expected to not be filled. Okay.
Yeah.
So we expect that these ones are going to be breakaway gaps, or in other words, not going to be filled, because we have a POI stack here. And because we understand our rule of first line of defense. So first line of defense would be the POI stack. Everything below is pretty much irrelevant.
Okay.
Here we trade in and go, right?
Yeah. And after that, there is the second fair value gap, the first line of defense. And then we have like this break. And there is again like smaller fair value gap
Right.
that could potentially comes back and breaks the structure if this holds.
For sure. So again, what do we know here? We understand now that we have the previous weekly low in place. What are we testing, right? In this case, we've set our testing guide here beforehand, right? We're looking for the information regarding low of the week manipulation and how that can result in us taking bullish trades for the rest of the week. What day are we on right now? Only on Tuesday. Okay. So the minimum next likely drawn liquidity is here. The low of the week is here. We can expect that we should be taking longs at least up until here with ease and possibly further. Okay. So I know that this sounds like a lot of information, because it is a lot of information, but hopefully it's not difficult to understand, right? Does anybody understand the process, like not understand the process as a whole that we're doing here? Yeah, everyone's good. All right, so the next thing we could do is look at follow fractal order flow, right? So we've done that. We've looked at the H1 order flow, H4 order flow, daily order flow, weekly order flow. It's all bullish. We've been tracking that. We can mark out ISPs now on the 1 minute as well. Do you want to do that for us?
Yeah. Okay, let's start it like from down here.
Any point, doesn't matter. Down here.
Yeah, just that I mean, this is the weekly point, right?
I can't see your drawing.
Okay, so right here, then this,
Can't see your drawing still
this.
though.
I don't know
Oh.
why.
Wait, do it again.
Is it showing now?
Yeah, now it's showing.
Okay. Okay,
Yes, so,
now it's good.
okay, so we have this one you said?
Yeah,
This
that one, then,
this one,
and one before that.
this one, this one?
Yeah.
Do we?
Yeah, it's respected the imbalance and we have a breaker. No?
Yeah, we have a breaker. Where's the imbalance though?
And we have imbalance.
Is
Yeah.
that- Oh, that is imbalance right here, you mean?
Yeah.
Yeah, it's a
Yep.
small.
Respected the imbalance.
Wow.
Yeah.
Very nice, very nice. Okay, cool. And we have a breaker, right? So just following first line of defense. First line of defense is what is how we track order flow, right?
Yeah.
So we have bullish
So-
order flow here on the 1 minute. What is the next likely thing? Like what else do we have to do here from now on? Just following this guide here. Follow fractal order flow. You were gonna mark these out.
Yeah, I have a question.
Sure.
Should we mark also this and this because, or after this break, we should wait for the some kind of pullback?
Well, these aren't filling imbalance or really like liquidating anything major. So on a fractal level, yes, this is absolutely a sweep. But when we're looking at the 1 hour alone, like I wouldn't consider these sweeps.
Okay.
Go to after this video, remember everybody, go watch the liquidity segment of the course. Over there, I have a video that I put out called Standard Liquidity Concepts. And over there, you'll have strict definitions of all liquidity. Okay. You'll have strict definitions of all the different types of liquidity. So we can avoid making, discretionary decisions like this. But yeah, on a lower time frame, that is 100% liquidity.
Okay.
But for the 1 hour time frame, this is the order flow that's in control. When we broke this structure, does that give us an SMB?
I wouldn't say SMB. I would, if I would consider as a break of structure, I would wait for at least this point to be broken, right? Because the move started from down here.
100%.
So
100%. So like your minimum one is here, right? Because that'd be the ISP
Yeah.
that breaks. But yeah, your structural point is potentially all the way down here. So if you want,
I
it to
can
be
call this as order flow shift, but
100%.
that.
Okay, that's what I was looking for, right? So this could be your order flow shift. Not that needs to be marked out in this case study, but we have order flow shift. So for anybody that doesn't know, order flow shift is like a break of sub. It's not an SMB. Okay. An SMB is when an ISP takes out another ISP. Then you get an SMB, and an SMB signals that institutions have switched their bias or switched their intention. Okay. So we have ISP here and ISP here. These are both type 2s. We have a clear draw on liquidity, 2 clear draw on liquidities. Can we look on a lower time frame to confirm these?
Yeah.
Okay, first off, can we trade these alone?
Yeah, of course we can.
Okay, what would those trades look like?
If I'm gonna enter on the first one right here, I would put my limit right here, and because this is 1 hour, I would set my stop loss probably below this candle.
Nothing you drew showed up for some reason. Oh, wait, there we go. Okay, so you're saying enter on the base and put your stop below this candle?
I would, yeah, candle 2.
Candle 2. And
Yeah.
then targeting?
It would be up here. Next likely draw on liquidity.
This one?
Yeah.
Okay. So you have very nice 5.6R. Okay, extremely clean trade. Nothing else, no need to confirm this. Right? This is absolutely beautiful. No need to confirm this. Build a case study out of this. Write down and try and understand now what you could do also is go onto a lower time frame and see how you actually would have. I can't go down too low. This is why we're going to start
Maybe
using
on a
FX.
30-minute.
we're gonna start using FX replay moving forward. But if I go over here, 15-minute, I think. No, what was it? 30-minute was
30,
the lowest I
30,
could go.
30. Yeah.
You can see nothing changes. If I was to go on a lower time frame, you would completely miss this trade. So don't just build the case study on the higher time frame. Prove to yourself, build case studies, and write about how you would have missed the trade by prioritizing low time frame, trying to catch stupidly high RR that, you know, is irrelevant. By forcing yourself, like now like we talked at the beginning of the session before I recorded, I talked about how I'm going to force myself moving forward to take the highest time frame FEG available. And it's because by doing this, you're tracking the time frame where order flow is in control. In this time frame right now, the order flow is in control, completely in control on the H1. There's no need to go lower. And I mean, on the H1, you can get an 8.3 pip stop here. Where's the next trade available?
The next ISP right here. So my limit would be on this point right here, and stop loss would be below the first ISP.
9 pips. 5.3R, 5.6R. On the same day. This is at 6 a.m. So this is not the best time to trade. It's not a kill zone, but it is still between London and New York. So it's like the slower time of London. It's pre-New York, so it's not horrible to trade. And when we're on a higher time frame, we can give a little bit less weight to trading, you know, time-based, time-specific concepts. So for anyone with a day job, you know that you can trade this pretty easily and not have it disrupt your whole life. If we look again here at this FEG, let's look at the time that this formed. 2 a.m. What does that tell us? 2 a.m. is London open. What does that tell us about this FEG?
That it's gonna hold, I think. I mean, it's on the
Yeah,
London.
it does. But what does it tell us specifically about that FEG? What does it mean? Let's apply logic to it. If it happened at 2 a.m.,
the
what does it mean?
timing is the right. So I mean, everything is like matching with the timing, with the open and the
Right.
price.
And that what that tells us is that it is a result of institutional involvement. Okay. So what
okay.
that means is because it's happened at this time. Yeah, now your drawings all came up. Because it
Mhm.
happened at this time. Not this tool, this tool. Because it happened at this time, we understand that there's institutional orders in here. If this happened in the spread hours session or London session, or sorry, Asian session, we wouldn't be so interested in it, right? So this is not like this is not something that you're going to need to be profitable. But first off, it's just extremely interesting to see how these markets are operating based on time, and also just as a confluence to back up your your narrative and your confidence in your trades, right? So we have two beautiful trades here, a 6.5R and 5.3R on the same day, following order flow that's backed by the idea that that low of the week is in. And if you can take both of these trades this week on Tuesday, you can literally take a vacation for the entire week, right? You don't have to trade at all for the rest of the week, and you can wait for some more clarity in the following week, right? So there's your case study right there. This is the entire case study for this session. What did we learn? What did we learn, guys? Anybody else on the mic?
Okay,
Yeah, thanks, Bowman. Actually, you know what? You do it. You do it. You were walking us through this.
So the Monday, the manipulation it creates on Monday. So the thing we know is like if the manipulation is on the Monday, so most likely on the Tuesday and Wednesday we're gonna see the real move to the right side. In this case, on the upside. So we should like hold to that bias till the end of the week, and we can like trade the buys from after the manipulation happened.
Okay, let's see here. Okay, weekly low form. What caused the weekly low to form? Manipulation of what?
Manipulation of. Oh, taking out the weekly low.
Okay, manipulation of previous weekly
Previously weekly
low,
low.
right?
Yeah.
What did it come into? Let's go up into the time frame. Up. What did it come into?
The next likely drawn liquidity.
Or sorry, what did it react to? Like below liquidity.
It react from the type 1
Type
ISP.
1
So
ISP into what's the zone?
into the order block of previous
Daily
daily.
order block. Order block,
Yeah.
sorry. Okay. You have a daily order block, previous weekly low into a daily order block. So what we're looking for is manipulation into a higher time frame POI. Okay. Manipulation into a higher time frame POI. And then off to the races. What else did we notice today? On the H4, we have H4 realigned, realigned and offered a trade, right? Mark out how much R it offered. Where was it? I don't remember what the trade was. I think it was on the base of this and below this candle. It was here. Offered a trade
Yeah.
for 5.75 R. 5.75 RR. Okay. Remember, in this 4-hour trade idea, what was our HTF? Because we're framing based off of HTF, MTF, LTF. What was our HTF?
It was a weekly.
What was our MTF?
It was a 4-hour and
No.
1 hour.
No, for this trade specifically, not these 1-hour
Oh.
trades, but this one specifically.
It was a 4-hour.
MTF was the daily.
The daily?
Yeah, the MTF for this trade idea was a daily, and we executed on the LTF, which in this case is the 4-hour.
Oh, okay.
Right? So the trade funneling system can be used for any 3 or more time frames. Okay. All we're doing is building a higher time frame narrative, which in this case is the weekly. Then we're finding our way in price. In this case is the daily confirmations. And then we're executing. So the trade idea really generated from here on the daily. And then we've confirmed it with the 4-hour and executed on the 4-hour. Therefore, this becomes our LTF. And our entry model, as we've covered it, is a lower time frame, displacement causing order flow shift, or in this case, SMB, leaving an FEG, entering on the FEG and covering candle 2. Does that fit the trading plan? Does that fit the entry model?
Yeah.
Fits it exactly, right? So we can say that the 4-hour in this case is our LTF, right? So you can mark that out if you want. So let's say weekly HTF, daily MTF, H4, LTF, right? The
Yeah.
next trades, or what do we see here as well, right? So before we go this, let's go. We see type 2s are holding until next likely draw on liquidity. Generally, when we have a next likely draw on liquidity, what we're looking for again, so HTF would be our long-term bias, right? We're setting those higher time frame targets. The MTF is where we really want to see that those type 2s hold. The LTF is, again, it's finding or is, sorry, the LTF is executing within that order flow of the MTF, right? It's,
yeah.
So we don't need it to be the most exact thing in the world, okay? What we're looking for is to ride the wave of the MTF and the HTF, okay? So in this case, of course, these type 2s are holding beautifully, and brings us up there. Okay, so for the next one, what are the next trades?
I think yeah, it happened like over here.
Right. So we have the H1 trades. right?
Yeah.
Okay. Let's write about it, right? What did we learn here from H1?
That we learned that I mean that's the order flow holding on H1, so we're gonna watch the H1 forming that order flow and create trade ideas from it.
Yeah, so following H1 order flow. So what is order flow exactly? It's type 2's
Type 2.
holding and first line of defense, correct?
Yeah.
Right, so that's really how we classify order flow. And we can see that we have order flow intact, these type 2's are holding, and it's respecting first line of defense, right? We're not coming back lower. We're respecting first line of defense, we're respecting first line of defense until we hit that draw on liquidity, and then there's no, we have no idea what's going to happen because we've hit an area of liquidity now. Okay. And what did these offer us in terms of RR? We have 6.5, 6.59, was it? 6.59 and 5.33. 5.33 RR. Okay, so we've studied how order flow fractally works. We've studied how we can form a bullish bias based off the low of the week. We studied how the daily realigns, confirming it, and how we can trade that MTF order flow up until the draw on liquidity. We've also studied how it's actually beneficial to take the highest viable FVG and just taking trades off of that rather than confirming it with even lower time frames, right? Is there anything else that we learned based off this case study? I think that's about it.
Yeah. I mean,
Yeah.
following type 2 is still the next draw on liquidity on a higher time
Yeah,
frame.
and it's
So
proof of following type 2 system works, right? Now what I want you to do is not just take bullet notes like this, but actually write a debrief. Okay. So you're going to save the screenshots. On Monday, I'm going to give you guys a Notion because I have to take my own Notion now and create a template out of it and delete all my data and stuff and then share it with you guys. So I won't be able to do that right now. And then I'm going to give you that, and I'm going to give you guys an area to save all of this information and write your briefs on your case studies. So these case studies should be as in depth as you can possibly make them. Excessively in depth, right? You guys should be marking out everything, checking the times of day that these things happen. Be excessive with details, excessive with your brief. So what you write about, right? In extreme detail, right? And then as we progress, these details will become less and less and less as the information is ingrained into you, right, as a trader. But at the start, if you want to learn and you want to learn quickly, be slow and methodical. Like, be super slow with this. Don't rush it, because rushing actually makes this entire process take way longer. And if somebody had told me that like 3 or 4 years ago, I would have been a way better trader than I am right now. So take the slow process because it actually ends up being the fastest one. Build super detailed case studies. Okay. Send them to me or Pat, have us review them. Right. And yeah, we're going to point out mistakes. And then when we point out mistakes, go back, fix it on the case study, save the old one though, so you can compare the difference. Right. And then do this every single day, 2 or 3 case studies a day if you can. Bare minimum, just do 1. You don't need to do too many. Don't sit there and do them for 6 hours straight. Just do 1 or 2 extremely detailed and intentional case study building, right? And then go and review it at the next day or the beginning or the end of the day, right? Go and review it. And what this is doing is really ingraining the information. You don't need to go on a sprint for 6 hours straight, right? You're not actually going to learn anything. All you need to do is apply it and then meditate on it, right? You want to sit down and you want to reflect on it. And what that does is lets this information really sit. It's not in the doing that necessarily makes information stick. It's in reflecting over it. Okay. And this is like literally like cognitive psychology 101. If you sit on it, reflect on it, and review, that's what makes information stick. It's not about the amount of work that you do. Okay. So let's count up this 6RR so we can start getting out of that higher time frame mentality. Let's even be less, the least conservative that we can possibly, or the most conservative rather, that we can possibly be, right? We have a 6R, 4R. Let's go this one. Let's just be the most conservative that we can possibly be here. Take it to candle 2, a little bit below. So 5.7 RR. 4.7, 4.47 RR. And we have a 4.79 RR. Okay, let's count these up. And we're going to use a, what should we use? Like let's use a 50K account or something. 5.7 times 4.47, oops, plus 5.7 plus 4.47 plus 4.79, 14.96 R in 1 week, which is fucking incredible. 14.96 RR, oops. RR. So we're going to risk 1% on a 50K account here, okay? So 50,000 times, or times 0.01, so $500 per trade risking. 500 times 14.96 times 0.80 on a 50K account on this week, just trading the system with the most conservative entry without trying to go confirm on the lower time frame, just focusing heavily on the higher time frame and following order flow on a 50K account. You could have profited $5,984. Of course, this is not including losses, but I mean, I don't really see personally many areas you could have even taken trades that would have resulted in a loss here. So unless you're going down into lower time frame and opening yourself up to those time frames where you really mess up, I don't really see any other trades that fit the plan that would have even resulted in a loss at all, to be honest with you. Let's see here. Like we had this push down here. Maybe if you tried to trade off this order block here to take out the high with a stop below, you would have been taken out in a loss for negative 1%. But you know, that 14.96, that 15R just becomes 14R. It's not really a big difference. I only see one possible area where you could have taken a loss, like trying to trade
That's
off
the
this
previous
S&P.
week.
Oh, and that's the previous week. Oh,
Yeah.
there you go. Right. So for
There's no
this
trade.
whole week here on EU, you don't even have a loss available, right? As long as you're following the plan, sticking to the rules, there's no loss. And this is what I mean. Just take the lowest hanging fruit, right? Our bias with this trading plan is so stupidly high. It doesn't make any sense to try and confirm it on this lower time frame and just throwing all of that work that you did out the window, right? Let's see, what was that now? Times 0.8, because that's the fee that they take, right? And then this is not accounting for commissions and whatnot as well, but I mean, it's probably not that much less than that. You guys do the math, find out what that is in your own currency, but I mean, that's a 50K account of just executing this plan flawlessly. Like I'm not there yet, obviously, but hopefully we all aspire to be able to execute this plan flawlessly like this, right? Any questions, guys?
Nope, that was clean as fuck.
Okay, so the next thing that I want you guys to do, okay, is then look at this and build out a map, build out a drawing of this, okay? So we can have even something like this. Sometimes what I like to do is just follow price like this Hear my cat? You hear? What are you doing? Right? Just following price like this, understanding on a drawing. Sometimes drawings will help. Understanding how this manipulation kind of occurs, right? So we can see here we have the low of the week, previous weekly low, right? We have the creation of the low of the week, manipulation, setting low of the week, right? We have clear displacement or distribution out. What else do we see here? Remember our last live where we talked about the power of 3. Does anyone want to hop on here and mark out the power of 3? Yeah, anybody, doesn't matter who.
Okay, wait,
Sure.
I'll do it. This is
Sure,
known
yeah,
as
go
talking.
for it. Yep.
Accumulation, manipulation, distribution. She shows. Looks clean.
Yeah, let's I don't know what's going on with Zoom today, but your annotations aren't marking out.
What? I already drew it and deleted it.
Yeah, leave it on
Manipulation.
for a few seconds so it's
Okay.
being funky. Okay, I'm not seeing it, but I'm assuming you're getting it right, right?
Yeah,
So-
yeah. What? Manipulation, then I mean accumulation, and then manipulation, and then distribution.
Accumulation,
Hmm.
manipulation, distribution, right? Power of 3.
Yeah. Yep.
Power of 3 set the weekly low and gave us distribution for the entire week. And this is why using this higher time frame analysis is so damn effective. Manipulation from the previous week. Accumulation of orders. So we're accumulating sell stops in this case to fuel buy side orders. Also accumulated orders on top. And you can see as we come above this liquidity, we have a pause in the market. Manipulation below, distribution gives us a beautiful SMB. I have to fix these. I like this better. SMB gives us a nice breaker block. Make this a little darker. Okay, it gives us a nice breaker block. And stacked in there is, let's see here. Where's my breaker block? Okay, we actually had an OB that we tapped into, so we can go like this. Well, we had an OB and we had this guy here, FEG, and we have like an O order block in here. So we can start marking this out. Let's copy like our case study. We have order block, FVG. We have a POI stack. We have a realignment. We have the power of 3. We can even do this here. Accumulation. Manipulation. Distribution. Power of 3. Accumulation, manipulation, distribution. We have the realignment. We can see how a POI stack framed up for us to take continuation trades. Right, and we can continue marking this out as in depth as we want. We have a next likely draw on liquidity. We have type 2s taking control. Am I missing anything at all? I don't think I am. We can have a breaker potentially in here. Like it doesn't need to be exact to what's happened down there, but just build you know, a model that makes sense, right? That we can frame ideas off of, right? So we have POI stacks. We can even go like this. Settings. POI stacks. Right. We can do let's see here. Let's go back down. See, do we see anything here? Previous weekly low. This one here, 1 a.m., 5 a.m. So this FEG here on a lower time frame happened at 1 a.m. So it's like pre-New York. That's a good time. So we have FEG, FEG happens at or happens in, let's call this London kill zone just for the sake of this, you know, what are you gonna call this diagram, right? It doesn't need to represent what actually happened in our testing here or our case study building. But now we have a beautiful model that we can set, right? So we have Monday. Trade 1 happened on Wednesday. Trade 2 and 3 happened on, oh wait, so this is different weeks even, right? So we can even look deeper into here on Monday and see what caused this low of the week to form, but I'll let you guys do that yourself. Monday, Tuesday, but understand that this low of the week here, this low of the week here, this low of the week here, we hold that bias until we hit that draw on liquidity, that next likely draw on liquidity. Even though it's a new week, the bias doesn't change. We still haven't hit the draw on liquidity, right? And yeah, so we can build up case studies like this. We can go label it whatever you want. Let's call it weekly low manipulation. And continuation trades. Okay. I wrote that on fucking low of the week manipulation in a bullish market and continuation trades. Right. So now we have a beautiful model that I will screenshot here and send to the chat. I'll put it in PDFs and diagrams in the Oracle chat, and you can use that as an idea of how to build out your own diagrams, right? Simple like that. Any questions?
Yeah, I have one
Sure.
in terms of when we took the weekly liquidity, would we have to wait on, I think it was a daily SMB? Yeah, well, we have to wait for that daily SMB before we would be able to enter, or would we be able to potentially look for something in this lower part here? I don't know if you can see my drawings or
Yeah,
not.
I can't, but I'm assuming you're talking about the manipulation, like, and just above.
Yes, sir.
Okay,
Correct.
so you can. This is really just backing, right? So we're building that narrative out. This is really backing the idea, but I mean, if there's something presents itself on the 4 hour, you're very confident that this is the manipulation of the low of the week on, what is that, the Monday, you 100% can look for trades in here and continue order flow to take out like this level here. Yes, it's a little bit risky, but if you're very confident in your analysis and you can determine that this is the low of the week, there's zero reason why you can't start looking for trades in there. It's just
Okay,
riskier,
because
right?
the daily would still have been bullish.
100%.
We actually right before then came off of a daily FPG, so I was like, whether you
100%,
could.
man.
Okay, cool.
100%. You can, we all, yeah, we 100% know that this is the next likely draw on liquidity. Like we're, you know, reacting to this FEG here. This is like an entire breaker, I think, on the higher time frame. We understand what's driving the market here. This is easily an area that we can look for trades or continuations on the trade. Let's look into it for a second. Now, is there anything clear here that I see? We see a giant falling knife. And then if we look here, it's in spread hours, so no trades here. No trades here. There's nothing of interest to me here. Like, I don't see personally how I would have gotten engaged with a trade over here, but there's no reason for me beyond time, like time of day. This is all ugly that I would say limits you from doing that or building a case study around it. But let's see on the 15-minute. If we determine that this is the low of the week, we can see here we also have had a sweep. So that gives us a type 1, right? Type 1, we have the order flow shift. Order flow shift. So our entry model is, what's our entry model, Chris?
Now we would be looking for type 2, so hold since we're
Yeah,
now.
mark it out.
Oh, sorry.
I don't know if I'll be able to see it, but
So we should be looking for here now.
this is super annoying that I can't
and-
see. So just follow
Just
my
wait a
mouse
few
because I actually
seconds.
can't see.
Stop. Yeah,
Here?
there. That would
you're
be
looking at
the
this one here?
yes. Correct.
Beautiful. So where would the stop be? Or where would the entry be?
Entry would be at the open of the FEG, and stop would be below the third candle. We also do correct, and we also do have the I would use that as an OB, to be quite honest with you.
100%.
Correct.
Absolutely correct. Right. So well, this whole thing.
And yeah, that'll be the first trade. Stop would be the correct where we have stop right now, and then
Yep.
target would be. I'd have to say that SMB right there.
Yeah, I would say so too. I would say so too. Now, you could potentially hold it longer because we have that backing, but because we this is a very large liquidity pool, I would say that, yeah, I would hold it up to there. And I mean, it's a 15-minute time trade. Where else could we put the stop, Chris?
I would say below candle 2.
Yeah, below candle 2. And if we look at this here, this OB, did you familiarize yourself with consequent encroachment?
Yes.
Okay, so consequent encroachment is the 50% of an FEG or an order block, okay? 50%. Price tends to respect that if it wants to be bullish, okay? If order flow is intact, candles should come below CE, okay? We see the 50% is above candle 2, gives us more confluence that candle 2, below candle 2 would be a good place to have your stop. So that 2.69R becomes a 4.13R.
Gotcha.
Right?
Now, would that be for the consequent encroachment? Would that be the wick or the body that would be respecting that?
So my rule of thumb here, there's no right or wrong way to do this. Just from my testing, what I find is that long wicks I don't include, and small wicks I do include. And also, if there's an FEG stacked in here, you can include the wick, right? And you'll see here it doesn't actually tap into it. But
No,
because
well, that wasn't my question, but that did
Oh.
answer a question. In
Okay.
terms of the respecting the consequent encroachment, would it be the wick or the body? Because pretty much everything is the body.
The body,
So-
yeah, the body 100% should. But what tends to happen is that price won't even come below it at all. But if you want to,
Gotcha, okay.
if you want to validate it, then the body shouldn't close below because bodies are telling the story, right? Like even realistically, this whole candle can wick below this OB and it could still be valid. But we're traders, and what we're doing is we're trading on, what's the most probable outcome, and the most probable outcome in this case is that price won't even come below.
Right. Okay. Cool.
And there you go. That's another trade before the SMB. So we even have another trade that week. to bring this up, we have a 15-minute trade, which brings us up to 4.13, 4.13 plus, we have here plus 14.96. And this is why I'm cutting down my pairs, because focusing on 2 pairs is all you need. 19.09 R on a 50K account. So we have $500 risk because 1% times 19.09, 9,545 times 0.80. This is your available earnings for the week, not including losses or commissions or taxes. You can pull out $7,636 out of a 50K account, right? Any questions from anyone else? And I hope this doesn't look to you like I'm selling you a pipe dream here with this kind of money, because it is a lot of money. But if you could execute this flawlessly, which you won't, but our job here is to try to as best as we can, and maybe in 10 years from now, we will be able to. But even if we can get 50% of that, it's just a ridiculous amount of money. Any questions from anyone else?
Nope, I don't think so.
Drop
Absolutely.
a 1 if everybody's on the same page in the chat. Okay. All right, well, that's today's session. You guys know what you guys have to do now over the weekend?
Yes, sir.
It's gonna be a
understand the
super busy
homework?
weekend.
You're gonna be busy this weekend? Or
Yeah, man, this is a lot of stuff.
dude, this is, I know, bro. This is what you got to do. No one fucking tells you this. No other community tells you what you actually have to do to win as a trader, right? Like, this is a business. Treat it like you're fucking going to school, right? Like, do your homework. Nobody tells you this.
And then you still have to go through all the new videos that you just put out.
Yeah,
So
no
and
rush
I'll
though.
probably go over this about twice. So
What we're doing here,
Yeah.
this case study building, we're doing this for 2 weeks straight. Okay, so
okay, got you.
you don't gotta fucking do this in one weekend. From this point on, like, the last 2 weeks of straight up educational content has been like loaded full speed ahead. Like, we've been going super quick with it. Now we're gonna slow down a bit. I'm gonna do this with you, by the way. Book some one-on-ones with me if you have to. And we'll work it out. But yeah, we're going to do this for literally 2 weeks straight before we move into back testing process. So be very, very deliberate with it, because 2 weeks is really a tiny time frame if you think about it, right? So be super
Yep.
deliberate with it and be consistent. And I'll assign homework as well. Like, this is the homework, but you know, every couple of days I'll assign like a selection of price and we can all build case studies on it together. Keep that community aspect of this going. All right. Any other questions from anybody? All good? Then we're gonna end it here.
Yeah. Thank you for the session
Thanks, guys.
and goodbye.
Thanks, man.
Thanks.
See you guys.
Have
Ciao.
a nice day.
You too, guys. Bye-bye.
Thanks.